Infosys founder N.R. Narayan Murthy on Wednesday said that his decision of not allowing the children of Infosys founders or the next generation of promoters to take active role in the IT major was completely wrong. Speaking at an event organized to celebrate the 40 years of Infosys, Murthy admitted that it deprived Infosys of legitimate talent. His longtime partner and the company's co-founder, Nandan Nilekani, meanwhile, said that he would hand over his role to a non-founder when he exits the company. So, is Infosys facing a succession challenge?
In fact, they don't have a succession challenge. What Nandan was saying is that they will find a non-founder chairperson to succeed him. And there is enough time. The runway between his age today and his potential retirement date is large. And whenever he believes that the reins have to be handed over, there's enough time to find a great successor. I think this is to my mind, a very long visioned statement that Nandan and Mr. Narayan Murthy made. And they are trying to make the ground that they will look for a competent person who can fit the bill as chairman of a large company like Infosys. And that's the signal that I read in all the comments. I did not get an impression that it was a knee-jerk reaction or a reactive way to deal with what happened with Mr. Sikka. To my mind, this was a positive succession planning announcement.
Infosys was founded in 1981 when 7 engineers from Patni Computer Systems, N.R. Narayan Murthy, Nandan Nilekani, N.S. Raghavan, S. Gopalakrishnan, S.D. Shibulal, K. Dinesh, and Ashok Arora came together to launch Infosys Consultants with a modest investment of 10,000 rupees. And one of the cardinal rules which all 7 co-founders had agreed upon was to never have our hand in the till, Murthy said on Wednesday. The company's uncertainty over choosing a future leader comes in the midst of a challenging time for the IT industry. A quick look at the performance of top-tier IT services players in the first quarter of this financial year, or Q1 FY23, shows that they are still far away from getting a grip on managing attrition. Infosys' margins came in at 20.1% for the first quarter, lower than its range of 21 to 23%. The management said the compensation impact during this quarter was 160 basis points, while the street was expecting it to be in the range of 75 to 100 basis points. Moreover, with the current war for talent and the struggle that the IT industry is going through to add people and meet demands, suggests that the quest for non-linear revenue remains an elusive target for most major players, including Infosys. Nilekani and Murthy's concerns regarding succession comes after Infosys' first attempt at this, with Vishal Sikka as the first non-co-founder CEO, saw a bitter end. Sikka resigned following a tumultuous 3-year tenure and saw Nilekani return in 2017.
The core characteristics of the organization or that provide the foundation of the organization. So that has to be retained. So the person who is going to replace must have basically sharing the same kind of values, same kind of capabilities or more capabilities, and that are required to take the organization to the next level. So in terms of the values, in terms of the characters, in terms of the respect for what has been done in the past must be there. It is very important that whoever is coming in has the stewardship values, means that that person is coming here as someone who is here who has been inherited with the values, inherited with an organization of this kind of a caliber, capabilities. And that responsibility of the new leader is to preserve, protect, build on it, and pass it over to the next generation.
It also turns the attention to the current CEO, Salil Parekh, who brought Infosys back to its growth fundamentals as the firm has surpassed its closest rival and peer, Tata Consultancy Services. Since Parekh began his strategic review more than 4 years back, he has been able to improve his targeted 4 core focus areas: agile digital business, energizing the core, reskilling, and localization. Not only that, Parekh seems to have balanced his relationship with the founders too. The recent statements by the co-founders also indicate a sharp move away from the core philosophy of keeping the company away from familial succession lines. And this might even have implication for the overall structure of the IT giant in the future.
I tend to disagree with Mr. Murthy. So the reason is that from the very beginning, they've kept the ownership and the management capabilities as different. So if the organization has to be successful, it needs the right talent, right capabilities, right culture, right values, and right leadership. And that doesn't come automatically just because somebody is inheriting shares. And organizations should not be considered as employment exchanges. And therefore, what is required is to make sure that the professional is managing the organization, professionally capable person. And one of the biggest challenges we find in the Indian context in large family-controlled businesses or partner-controlled businesses is that when family members or promoters are operationally involved, there are always challenges of keeping them together.
If you hand over to somebody the responsibility and it doesn't work out, there is no plan B. I can't come back at the age of 75. This statement by Nilekani, despite the steady sales maintained under Parekh's stewardship, does seem to ring a warning note for the tech giants' future. However, as experts point out, more than a warning, this might actually be a call to the company's management to begin headhunting in advance, with an eye on adapting to the changing IT market.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.